Hi, and welcome back to Reading Tea Leaves. I am John Ross, and this is where I take your stock and I run it through my brew of technical, sentiment, and macroeconomic tea leaves to let you know what I think of the stock and where I think it's headed. Now, today's stock is an internet security software and technology company, and today's tea is a dandelion tea, inspired by one of you who wrote in about making your own dandelion tea a couple weeks ago. So I'll get to those in a minute. First, hit that subscribe button, the like button, the notification bell to make sure you don't miss any of the content we post to the Prosperity Research YouTube channel. And of course, leave us a comment or a question, feedback, and a ticker symbol so we can run your stock through the tea leaves next time. So with that said, today's stock is VirnetX. And VirnetX, as I said, is an internet security software and technology provider. They serve customers anywhere from the individual up to a government agency and everywhere in between. Providing essentially secure communications over the internet. That might include domain name use, voice over internet protocol or VoIP, and some other things that are far beyond my pay grade in the technology sector and what have you. But you're here to find out what the tea leaves are saying about this stock, VirnetX, so let's jump right into this chart. I want to start sort of with a zoomed out picture. This is a weekly chart of VirnetX. And really what I want you to see here is that the price of VirnetX has been locked in in a range from about $1 to $8. And really the spikes that are taking it to $8 have been short-lived. So it's been stuck in this range, just sort of meandering along up and down above $4 per share on the stock. So it has its moments, but it tends to give them back. So with that, let's move into a more zoomed in view with a daily chart of VirnetX and just kind of walk through what we're seeing here year to date for the stock and where we might see it going in the next couple weeks or even months. First thing I would like to do is draw in the apex movement patterns, or the amps. I would draw in an A wave somewhere around there. Obviously, we got some intraday craziness going on, which I'll talk about in a minute. Then I would draw the consolidation B wave 1, 2, 3 right around here. Again, there's some intraday spike action, so I would probably have that B wave right around there. And then in order to sort of get where my C wave would come into play, I would use an extension tool, and I would draw in from where this sort of this trend rally began. I would draw up to about the A wave, and that would draw down to the B wave close, and that would put me somewhere right around 6, where the stock is trading right now is a 100% extension. And then as you can see, a little higher there, 138.2 and 161.8%. Those are common Fibonacci extension numbers that I like to use to give me some context in my trading decisions. For all intents and purposes, this amp is complete. We could see obviously a bit more of a rally here to new highs and maybe get to that $8 per share level, but we certainly don't have to. And some of the weakness last week that we saw from this stock might suggest there's more downside ahead before VirnetX kind of finds its footing again and climbs and sort of continues to rally. Now, back to sort of some of this volatility. Back in February, where we saw kind of this really the acceleration in this uptrend beginning for VirnetX. That was a time when the U.S. Supreme Court refused to hear an appeal from Apple about some patent infringements that it was charged with, essentially violating some of VirnetX patents. It had been a years-long battle, so essentially VirnetX came out the winner here. Apple was liable for payments of somewhere around $400 million to VirnetX. So the stock price really kind of rallied on that news over the course of February and into March. And then we saw a big move last month in the early part of May 8th. We saw, let me just measure this out for us. We saw a move of about 21% in one day, similar to what we saw back on the Apple news in February. But this 21% one-day move came when VirnetX announced a special dividend to shareholders. So a big bonus there, a big surprise there, and really we saw that propel the stock higher on that day, and then sort of some follow through after that. But now we're starting to see some of that strength fade. The stock was down 14% last Thursday. I was searching, I couldn't find really anything to explain why such a big decline. But whatever the case, it looks like this rally, this three-wave amp, is complete, and that VirnetX's stock needs to pull back, needs to retrace some of its year-to-date gains before it's going to move significantly higher from here, if it even does. Obviously, we see the recent last 5 years track record doesn't bode that well for VirnetX making a real breakout here. But that said, we're sort of evolving. Our economy is evolving and moving, and we've been forced to sort of speed up that evolution based on the COVID-19 pandemic, the subsequent lockdown, and businesses having to sort of twist and maneuver and adapt to changing work conditions, employee environments, and of course meeting the needs of its customers and its clients, not just in person but online, and of course figuring things out with supply chains. So internet security, the software and the technology that underpins all that is more and more important now than it really ever has been, and I that's not going anywhere. So if VirnetX can hold up, as far as from a financial backdrop, then it probably bodes well for this stock. But we want to be careful here in the short term based on what this chart is telling us. So I want to look at the indicator running across the bottom. As I told you last week when I looked at Novavax's chart, this is the bar indicator, the black and red indicator that I like to use to help sort of identify when a stock is in a buy setup or a sell setup. Now, if you look at the indicator, that blue line that's running through it is the exit signal line that I developed, and really what it says is that if we are in a long trade or a buy, which we are when the bars are black, as we have been recently, once those bars drop down below that exit signal line, that is indication or a signal to exit the trade. So at which point, once we're out of a long trade, once we break below that exit signal line, then it suggests that we are either set up for a sell setup where we can short the stock or buy put options. So we're looking for that change from black to red for that short setup or that sell setup. But if not, if the stock breaks back above that exit signal line, that essentially makes the trade valid again and really creates a setup for a long trade all over again. Now, if you're interested in more about this bar indicator and how you can get in on my Apex Profit Alert trading service, be sure to click that information bar right above, right here in the upper right-hand corner of your screen. That'll allow you to watch a video presentation that my colleague Matt Battiali and I put together about the Apex Profit system and the service that we designed for people just like you. So click that if you want to. Looking at that indicator, it suggests we should be out of the stock at the moment, but looking for a sell setup, looking for a short here, or looking for a decline to come where we can buy back into this stock at a better price. If we get that, what type of decline are we looking at? Again, we drop in some retracement measurement tool on the uptrend we saw, and that would take this stock somewhere down from current levels, down say 16 to 34% from current levels. So I think that kind of gives us a sense of what to be looking at as far as what the tea leaves are telling us, what the setup is telling us, and what some of maybe the recent weakness in the stock price is telling us. Now today's tea is a dandelion tea, and as I said, inspired by one of you writing in. I love when you guys write in to tell me about the tea you're drinking or the tea you're curious about. But this dandelion tea It's not fresh tea. It was not, picked from my backyard yesterday or anything like that, which I'm kind of jealous about. This is from a tea bag that I was given by a friend, and I don't love tea bags. I'm not better than a tea bag, but generally, if you're using a tea bag versus a fresh loose leaf tea, you're going to get a much fresher, much higher quality tea in the loose leaf than you are in the prepackaged tea bag. Now, that's not to say all tea in a tea bag is gross or old or just bad quality, but it is to say the experience is certainly different. This is a dandelion tea. It's the first time I've had a dandelion tea. It has a real buttery, grassy flavor, a little bit like buttered popcorn almost. It's very smooth, very easy to drink, and as we talked about when I mentioned this before and talked about some of the other sort of tea alternatives that are out there, the health benefits of like a moringa or a yerba mate, dandelion tea is one of those that is just packed with health benefits. So if you have the opportunity to track down some dandelion tea, I would recommend it. But until then, drink up. Now that's all I have for you today. I just want to remind you, hit the subscribe, the likes, drop us a question, feedback, ticker symbol, and we're going to run it through the tea leaves for you. Until next time, take care. Have a great day. We'll talk soon.